My guest today is Wayne Mcdonell of FX Bootcamp. Hi, Wayne.
Hi.
Tell me, for someone that's a novice, how do we create our own trading plan?
Well, trading plans are very, very key to being success, not just to novice traders, but to professional traders. And the idea of having a plan is powerful because you're thinking ahead. Most amateur traders respond. They see the market move, they see a big red candle and they want to sell, they see a big green candle and they want to buy, but they're never really certain of why it's happening. They're simply jumping in after the fact. But there are many false alarms in the trading world, especially when you're drilling down to the very, very short term. So all trade plans start with sound fundamental and technical analysis skills. Okay, that's the first thing. But the second thing is you're trying to think 2 or 3 or 4 candles ahead, whether they're 15-minute candles or day candles or weekly candles. It doesn't matter. On all time frames, a trade plan is thinking ahead, sort of like a hypothesis. If you think the market's going to suddenly find support, rebound, and start rallying, well, you create a plan based on that. Look for support, try to guess where this change in sentiment will take place, and then once you start to see evidence that it's actually coming together, that your hypothesis was correct, perhaps a lot like scientific methodology, you come up with a hypothesis first and then start testing.
Yes.
Well, you're thinking ahead, and if some of the so if you're expecting green candles, suddenly you start to see green candles, perhaps your hypothesis was correct, and then you decide to trade, which is a lot different from just buying blindly because of price.
Mm-hmm. So you have fundamental analysis, and then you're looking ahead.
Yes.
How about risk management?
Well, first of all, touching on that fundamental analysis again, all good trade plans start with your bias. Are you bullish on this market or bearish? Even if the market's collapsing, you could still be a bull waiting to buy. So, so that's why you create your trade plan in advance, and that's where technical analysis, identifying support and resistance, or I like to use Fibonacci retracements and some pivot points. All this is very key. So you're using fundamentals and technicals combined, but without the discipline to wait for the plan to come together, then your plans are likely to fall apart because you're trading emotionally, not logically. And then risk management is a whole nother thing. How much are you willing to risk to see your plan potentially come to fruition? How much of your money are you willing to put on the line to see if your hypothesis was correct? Well, amateurs don't have a very strong understanding of what that means. As a professional trader, I'm not trying to make money. I expect to make money. I'm implementing my sound fundamental and technical analysis, and hopefully I'm using the discipline to carry out my plans. My chief concern is risk. How much risk am I taking? And more importantly, if I'm wrong, I don't have so much pride in any given one trade where I have to let the losses get bigger and bigger and bigger in hopes that one day I'll be right. If I'm wrong, I have the discipline to get out before things get worse. And that is another part of risk management that I think amateur traders just don't do.
And it's another topic for another discussion. Thank you very much, Wayne.
Thank you.